Hello, everyone. John Williams, Wealth Advisor with Bautis Financial. And today I'm going to talk a little bit about Roth conversions. One of the most common questions we get are about Roth IRAs, whether it be conversions or contributions because of the benefits they offer. Today I'm going to actually talk with the assumption that you have a strong understanding of the difference between a Roth IRA and a traditional IRA as far as taxation is concerned. If you need to brush up on the differences between those two accounts, we'll drop a link in the we'll drop a link in the information below to give you some reference there and kind of brush up on that. But today I'm going to talk about conversion specifically. The question is, should I consider doing a Roth conversion? And here's a flow chart that we offer. If you'd like a copy of this after you're done, you just reach out to us. We'd be happy to offer that. And of course, we'd be happy to talk about your specific situation or answer any questions you might have about anything I'm talking about today or anything in general. So the first question you want to ask yourself is whether or not you're going to want the funds in the Roth IRA for your income in retirement. If the answer is yes, we'll go in one direction. If it's no, we'll go in a different direction. Now, obviously, assuming if you don't need this money, there's going to be charitable considerations. We're going to look at your beneficiaries. Today, I'm going to focus more on you needing the funds in retirement because I feel like it's just a little bit more common. It'll help you understand, the differences and the reasons why you might consider making this decision. Needing the funds in the future. And that first question will lead us, the next question, if the answer is yes, you will need the funds in retirement, that will lead us to, do you expect to be subject to the same or lower income tax rates during most of your retirement, either due to income levels or future tax reform? Now, this is really the million-dollar question, right? So what we want to, because we don't really know the answer, but we're going to make an educated guess and really try to help ourselves understand what the future is going to look like. And look at what our marginal tax bracket is today versus what we think it will be for most of the future. So if you're a high earner and your income taxes are quite high today, and you feel like even though based off of the way that you might want to live in your retirement, that your marginal tax brackets may be lower, then that leads us to yes, and it may or may not make sense for us to convert, because if we plan on paying more in taxes today than we would in the future, then the math doesn't work out. And then the second part of that is, do we feel like the government might hike up? Do we have a strong feeling that the government might raise taxes quite a bit in the future? This, in turn, making our marginal tax bracket higher than in what it is today. So all things being equal, let's say we earn the same in retirement or have the same income in retirement versus today, and the government actually increases quite a bit the marginal tax bracket, then we could see ourselves paying more taxes in the future. So ultimately, we want to pay less in taxes today than we would in the future, and that's where the most benefit is. So if the answer to that question is no, the second question you want to ask yourself is, do you have the cash outside your retirement accounts to pay the tax? You can, if you're over 59 and a half, to avoid penalty, you can actually take more out of the IRA and pay tax on it to actually then pay the extra tax that you would then owe on the conversion. Because ultimately what we're doing is we're increasing our income by converting this by dollar for dollar. So it's the most beneficial if we actually have the money outside of the retirement account that we already paid tax on to then pay the tax. If not, it does erode the benefits. And that's exactly where our flow chart sends us. If the answer is no, then it's not necessarily a strong no. It most likely might be. There are some other benefits there when it comes to tax-free distributions in retirement, and also looking at beneficiaries and how they're going to be treated. But if the answer is yes, then it most likely is going to be beneficial for you today to make some of those conversions. There are going to be other math included here. When we do this conversion, we want to make sure that we stay within certain tax brackets, that we don't trigger a much higher tax bracket. There's going to be a limit. So typically what we want to do is fill up that bucket. We can answer any questions about that if you have them. And then from there, what we're going to be looking at is who the beneficiaries on these accounts. There is different treatment as to how you need to get the money out of the traditional IRA of a traditional IRA, referring to what they call the 10-year rule. Some will be subject to the 10-year rule, others will not. So having that 10-year rule may actually, and when your benefits receive that traditional IRA, might influence your decision as well. And then finally, one of the things you want to look at is will this income then now trigger or push you into a different bracket that will then hurt your chances of other benefits? Some of the examples of that is Medicare, IRMA, financial aids, because this is going to show more income on your taxes. So you want to be aware of what that might do for some of the other programs you're looking ahead to. There is one more thing. I know I said finally already, but one more thing is there is a 5-year rule. So you want to make sure and be mindful of you're just opening up your Roth IRA. There is a 5-year rule where you will not be able to take the growth out without penalty. You're always going to have access to your principal, the contributions you make, but the growth will actually be there will be a penalty on it if you don't if you take it out before the end of 5 years. So that's something you want to consider when you're opening up the Roth and making these conversions. So. If you have any questions, like I said, please reach out to us and let us know. We'd be happy to set up a consultation and speak directly to your situation and answer any questions you may have. But until then, thanks for joining me, and I will talk to you soon.